Good day to one and all. This is Dr. Sivaraman of iknowindices.com. If you are able to hear me, let me take up today's webinar, Tracking the Forex Market Together, Part 1, on April 29th between 9 and 9:45 GMT. So, I used to track the market using the live market code page. I give the link for the same. You can open it in a browser. I'll also focus the camera over the live market code page. Besides, I will also show you how exactly the charts can also be used for similar studies so that you can understand how effectively you can use the charts for market tracking technique. Now, currently you find that Euro is trading around 1.485557. 1.4804 is the low, 1.4860 is the high, 33 pips positive net change is seen. In the case of GBP, they breached the high and 66.76, 66.80 are the correct levels. 66.26 is the low, 66.85 is the high, and 46 pips positive net change is seen. So now you come across that GBP is gaining more when compared to that of Euro. As a result, Euro GBP is slowly making the slide and it has come to 6 pips negative net change. And in the case of Yen, 81.45, 81.48 are the current levels. 81.45 is the low, 81.84 is the high, 81.64 is the high, and 6 pips negative net change is seen. So when Euro and GBP are showing the positive net change and Yen is showing negative net change, we understand that they are making the USD weakening more. Similarly, in the case of USD CHF, they have dropped and it has come below that of 0.87 level, the psychological level, currently trading around 86.82, 86.84, 86.77 is the low, 87.48 is the high, 53 pips negative net change is seen, when Euro has gained only 31 pips. So that indicates that they wanted to handle the CHF crosses more to start with before making the upward move. And so the majors are showing USD weakening more. But coming to that of the commodity pairs, Canadian dollar is showing 10 pip positive net change as the USD gaining more, and Australian dollar is showing 5 pips negative net change as the USD gaining more. So we know pretty well that the commodity pairs lead the rally and lag behind. So now you come across an instance of that nature, and so this is the trend reversal time, so you'll be able to understand that. Now, I'll go back to that of the PowerPoint presentation. So when you want to track the market, first of all, you have to use the live market code page as a simple tool to identify the high, low, and the net change, what I have shown it, and subsequently from there you can derive the importance or what the players intend to do. Before that, you need to understand the time frames used by the other players. So, Japanese session is over 0030 to 7:30 GMT, and 7 GMT. I not made the change, and 7 to 7:30 is the gap time, and 7:30 the European session starts and gets over by 13 GMT. 13 to 13:30 GMT is the gap time, and 13:30 to 20:30 GMT is the US session. Then afterwards you come across the gap time. So you find that we are now around 9 GMT, 1.5 hours from the start of the European session. That shows the early session is over. Afterwards they are just trying to make moves during that of the mid session in order to handle the crosses. So early and the late session, the first 1.5 hours and the last 1.5 hours, they will be handling the majors, and in between the time frame will be used to handle the crosses. So currently after 9:30 and 9 GMT, you find they gradually start handling the crosses. That is why you come across a contrarian move, what I explained, that majors are showing the USD weakening move and the commodity pairs are showing USD gaining move as a typical contrarian move, and that if they do, we understand that they are handling the respective crosses. Now, how exactly we have to track the market? First of all, you have to track the market using the GMT time frame. so that there won't be any confusions with regard to your local timings when you are interacting with others. So when you develop the tendency to talk to others also in terms of GMT time frame, then everybody will be able to follow the time rather than talking in terms of your local time. Then we have to identify the gap time, what I have shown, and the session start and the session close time, and also the mid session. Currently we are in the mid session, mid European session. So this is how we have to identify. So mid session means they are going to handle the crosses. So we can take positions in the case of majors, but ideally during the start of the session, if you try to take the positions in the case of majors, it will be useful. And if you take positions in the crosses during the mid session, we will be able to see the benefit. How exactly we have to identify that whether we can take a buy position or a sell position. For that, I have given the link, and I have shown the link also to show how exactly the highs and the lows are being set. And in order to understand the highs and the lows which are set around 3:30 GMT during that of the Japanese session, and they are referred as the initial lows and the highs. So let me show that particular slide and show you the initial lows and the highs. These are all the initial lows and the highs set for today. So euro formed the low 1.4804, which is not breached. 1.4846 was the high, and now they formed 1.4860. So up to 9:30 they are not breached, then gradually they started breaching the high. So mainly to handle the crosses. So we need to understand what they are trying to do. When they cut the high, initial high, and stay there for more than 30 minutes, that means they wanted to make an extended rise up to 2 hours, then afterwards reverse. So when they do such gain, then wait, and when they stay for more than 30 minutes above that of the initial high, then wait for 2 hours and afterwards take a sell position. You will be able to quickly book profit. And during the initial rise itself, if you take sell position, then you may have to hold for 2 hours and probably you may lose the patience. So our study is that when they breach the high and stay there above that of the initial high for more than 30 minutes, then comes the situation that they are making that extended move for 2 hours and wait for 2 hours. And if they are not breaching the new high in that particular 2 hours time frame, you can take a sell. In case if they breach that high again, the new high currently is 1.4861. So they breached it by about 9:30 GMT. So we will wait till 11:30 GMT, and then subsequently try to see whether they are breaching the new high or not and take the sell. In case if they breach the new high, that means they are wanted to make an intentional move and rise further up. So this is how we will be able to judge based on the timings. So let me finish the highs and the lows. In the case of GBP, they just breached the high, initial high 1.6663, and currently 1.6689 has become the new high. And in the case of CHF, they had dropped it below 87.28 and formed 86.77 as the new low. And in the case of yen, 81.49 was the initial low and they formed 81.45. The high is not being breached. Then in the case of Australian dollar, 1.0883 is the low, 1.0940 is the high, and both are not being breached. So that shows that Australian dollar, they are not making an upward stop, and only in the case of euro and GBP or an upward rise above that of the initial high, they have done it. And in the case of the denominator currencies, namely yen, USD yen and USD CHF, they breached the low. And in the case of Canadian dollar, 0.9503 is the low, 0.9527 is the high. They are not breached. So in the commodity pairs, they are not breached the high or the low, and they are making the USD gaining move. In the case of majors, they are doing the USD weakening move. Suppose you are trading from the other European country. So obviously, keeping awake around 2:30, 3:30 in the morning and trying to make a note of the initial lows and the highs might become very difficult. Then probably you can use the chart to know how exactly the initial lows and the highs are being formed. So let me focus the camera camera over that of the finviz.com web page, wherein you come across a similar condition, Euro, GBP, USD, and also Australian dollar, Canadian dollar. Everything is being shown, and current levels are being shown. And if you take the mouse, you will be able to see the chart, the 5-minute chart, which is being displayed there. And you'll be able to understand there whether they are trying to just take it up or they are just consolidating at a higher level, etc. And also related to the commodities in case you are interested, and also in the case of the crosses, some of the crosses like Euro, GBP and GBP yen are being shown here. You can find out how exactly they have placed it. Now let me explain to you how we can make use of the chart for that. So once you click here, you come across the chart is being magnified. You find the Euro chart is there, and I am just taking the 5-minute chart to start with. So 5-minute charts, you find the time I was not able to set in this particular chart, the GMT time frame. Doesn't matter, you can just take it from the start of the day, and probably you can go in for a 1-hour chart, and the start of the day will be seen. So it is 29 that is shown there. They are more of a consolidation here. And when you see the range, as I explained in the live market quote page, the range is hardly about 50 pips. And it appears it is going up. It appears it is going up. What they have done, they made a downward stop, and then subsequently they started during the gap time, and then subsequently they started firming up a little bit, and also made the slide during that of the European Japanese session. So now we need to find out what is the initial low and the high. So we failed to note down what is the initial low during that of the Japanese session. So what you can do is around 3:30 GMT. What is the high? You can just make a note of it, and you can see they formed the high, and during this particular time frame, so around 48, 46. So it need not be exactly the same level, but you can understand that they formed the high here, and then subsequently they breached during that of the European session now. So once they have breached and stayed above there for more than 30 minutes, if you find that another 3-4 candles are being formed and they are not breaching the new high, in case if you are not having access to that of the live market quote page around 3:30 GMT, then you can find out here, waiting for 2 hours also, you can wait and see how they are doing the higher level consolidation here and not breaching the high. You can use the live market quote page currently and see what is the high there set. 1.4865 is the high. Currently it is showing around 1.486566 in the quote page, 64 and 66 in the quote page. Here you come across about 1.4863. There might be a slight variation from that of the actual value, because here you come across every 5 minutes the candle is being formed. So if you go in for a tick chart, you'll be able to get exactly the level. But once you go in for a tick chart, then the chart become enormous. You have to scroll down and just move it laterally and see. So in order to make it convenient, people normally use it as a 5-minute chart and a 15-minute chart, 30-minute charts, etc. And if you want, you can just do it that way also and see 1-hour chart, for example, how exactly in the past 1 hour they have performed, and you find that they are just doing the consolidation. So we are not deviating from that of our main concept, identifying the type of moves in the market. But instead of the live market quote page, you can use the chart and find out when exactly they formed the high. So this is the high they formed yesterday, and today they are not breached that particular high. So you will be able to compare it with that of yesterday also. So they made an upward stop and early yesterday, and subsequently they are not done any of the gains of that nature. They are simply consolidating, creating the bullish field. And you know that the commodity pairs are the one to lead the rally and lag behind. So now they are lagging behind. That means the trend reversal is in the process. Still, it is not a one-point reversal straight. It is in the process. So when the trend reversal is in the process, the players hold the market and build sell positions. So how they can build the sell positions? By using GBP. GBP is a currency which can create easily the sentiment, and so they quickly make more rise in the case of GBP, and everybody becomes bullish and start buying Euro, thinking that Euro will also rise. Probably they may rise 20-30 pips, it's not a big deal. But if you fail to book profit, they may show loss. So if you emotionally buy at the highest level or emotionally sell at the lowest level, the level of risk is very high in the market. So they showed the high yesterday during the early Japanese session, and subsequently only now they are just going to that particular area. So anybody who bought it during that upward opening, they are forced to wait till this time. But before that they made the drop and showed a level below that of 1.48. So obviously they would have stopped out, and then later on they go up. So what it refers to, when they do the consolidation, that means that traders lose the patience during the rise, and those who are shorted all those levels, thinking that okay, this is the support resistance level, this is the resistance level, this is the resistance level, or Fibonacci retracements and etc. Finally you come across that the traders lose the patience and do the short covering and turn long, and that is the main purpose of doing the prolonged consolidation of this nature. But you can use that for our analysis, but the consolidation is nothing but testing the patience of the traders. So that does not give any of the calculation, or it does not facilitate us to derive anything. Probably you can go in for a channel study, and if you go in for a daily chart, you can say, okay, we can draw a channel line on the upside, channel line on the downside. Again, it is biased. I can ask the simple question, why not you draw the channel line from here? Why not you draw the channel line from here? And why not you draw the channel line from here? So that becomes subjective. If you take a larger time frame and you can draw the channels, and you will find the channel appears to be straight. But let me ask you a very simple question. Can the market be straight? Do you come across any of the second the market is making a linear progress? Not at all. It is volatile. No, it makes the curves on either way, up and down. So in such a situation, probably in order to make our study simple, we are trying to use the linear lines. But the best way to understand is going for a curvilinear analysis, and probably many of the analysts are not using that particular method of understanding how the curves are being formed. You can say that Bollinger curves and things like that, they are of the similar nature, but still when it crosses through that of this particular volatile move, invariably it averages the values and just make those swings insignificant. But actually the consolidations are the one which are supposed to indicate to us whether they are doing a higher level consolidation and an upward stopping, or they are just holding it to absorb all the cells to take it up further. So those understandings are very essential for us to take appropriate trading decisions. Otherwise, we'll see that continuously the market could go up. But can the market go up endlessly? Obviously not. So obviously we'll come across that the trend reversal is part of the market. So you come across the intraday trend reversals like this. Well, let me go to the 5-minute chart. So we start the day here, 29. So you come across the intraday trend reversals. They just dropped and rise. They just dropped and rise. They just dropped and rise, and then finally rise. So you can, after looking at the chart, you can simply say that, okay, I could have bought here, I could have sold here, I could have sold here, I could have bought here. They are all fine. But in the live condition here, let me do the same thing. Okay, from here, are they going to take up or are they going to bring it down? So it is very easy to make a comment. Okay, this is how the market was there. So the channel was like this. So we could have sold here, we could have bought here. Yeah, all paused, we can say. Here, from here, can the market go up another 30-40 pips for me to do a buy and sell? Or can from here the market go down for another 30-40 pips to make a buy? And we can say that, okay, there might be a retracement, or there might be a crossing over of simple moving averages. So probably you could trace about 31.8%, 68. Okay, fine. Then if you draw all the Fibonacci, up to what level they are going to retrace and go up. Sometimes you may not see the retracement and simply they may go up. And in the past, if you find a suitable points and try to draw the Fibonacci, you will come across that they are all working fine. But in the present, if you see that, you will not be able to give exactly up to what level they are going to rise and show it as a resistance. And the players normally do that breach of the support and the resistance in the market. Having understood and simply ignoring it and calling it as a noise, let us practically think that they are all the opportunities for us to trade. When they make an upward stop, we should be able to sell so that we will be able to quickly book profit. When they make a downward stop like this, we should be able to buy and quickly book profit during the rise. So how exactly we will be able to do that? When you find that the red candle formations, you find, let me confirm it, by the time it would have gone up here. So it might be a late decision. And also another disadvantage or the limitations with regard to the chart, you find that 3 red candles formed. Yeah, or here you come across that about 5 red candles are formed. But if you actually take the levels, it is from 1.4790 to 1.474830. So hardly about 40 pips. But it gives an impression as if the market has made a big fall. From here it has gone all the way up and fallen. And why it happens like this? Because when the market consolidates in a narrow range, automatically the chart magnifies. You find the range in the chart 1.4867 to 1.4760. But if you go to that of the weekly chart, you find the x-axis value is significant. Do you understand that? So here again you come across the red candle formation, and there again you come across the red candle formation, but there is an enormous difference with regard to the prep range. So if this is considered as the other red candle, then you are not able to visually understand how much a fall has happened. So invariably you have to refer to that of the level and find that, okay, there is only a 40 pips drop or a 30 pips drop or a 20 pips rise and things like that. So if you note down the actual value, okay, earlier the high was 4845, and from there they gained about 22 pips. That's what is about 1 hour, 1.5 hours, but they just made about 20 pips gain. So if you understand that, then you will not develop unnecessarily a bullish feel. Why I am telling it, invariably if you look into the chart, if you don't really understand in relation to that of the pip value, you tend to develop your emotions could be triggered. Then you might find that it is a big leap upward, so market could continue upward, so you go and buy it there technically, think that there could be a breakout trade. And now you see that they formed 1.4866 and just breached it by 1 pip and then resting around 1.4866. So they are keeping 1.4866 and 1.4868 call, and it's become black in the live market quote page. Here you will find the candle formation is also subdued. And later on they remove the order and just sell it at the lower level. That you may find out in the form of this sort of moves, the candle formation, you can say that hammerhead or all those things. But ultimately what you come across here is when they are doing the consolidation, the live market quote page gives the actual momentum of the market rather than the chart. When it just when it takes a longer time doing the consolidation, making a small move and things like that, you don't really understand what is happening here. And you go in for a magnification of the chart in order to, or 1 minute chart to find what they have done. Nothing significant. They are simply holding it. By simply magnifying it, you are not going to read anything out of them. And what you have to do is how exactly they handle the high, how exactly they are handling the low or prime, important factor for us. That is the difference I am trying to give it, and insisting upon using the live market quote page for you to use use it for your trading decisions. I'm not criticizing the chart. I am only just trying to emphasize that the charts can be used to note down what is the initial high and things like that. But don't be moved by that of the chart moves. And those moves are actual market moves only, but still you come across that the range could vary because it's automatically said. When you go in for a larger time frame, then the spread between the low and the high in the chart on the x-axis will be very high. But when you go in for a small time frame chart, then the spread will be hardly anything. But ultimately what is more important for us, how much of pips they have made a move here, rather than simply blindly comparing the yesterday's chart with that of today's chart. And if you do not demarcate this particular time frame, that today's move and things like that. You tend to continue from that of the yesterday, day for yesterday, or 50 days above or earlier, or 100 days earlier and things like that. And invariably you will try to get confused and going for more and more of confirmations with regard to these studies. So that is one thing, making the note of the initial lows and the highs. The second important thing is with regard to that of the trigger times. So the trigger times, for example, I have just shown here, hope you are able to see this, the events which are displayed in Forex Factory. You do come across similar thing in FX Street also. I'll just show it there. In the home page itself, you come across what are the next events to be the economic events which are going to be released. So 9 GMT, this 9, then 12:30 GMT, the personal income. All these things are nothing but the trigger times. And you might come across the importance of it with regard to the triple red and green and red and things like that. And also the previous and also the expectations and the actuals. So you can go in for these studies, but ultimately what is important for us is the trigger time. So you just make use of the trigger time and don't go in for the in-depth analysis of those personal income or any other data, because by the time you finish analyzing all those things, another trigger might come in the market which might change the market sentiment. So you should be able to understand that these trigger times are important for us. Okay, 12:30 GMT, there is a personal income which is shown in red. Okay, let me just close my position before 12:30. Probably you can take a decision of that nature. Or sometime when they are expected to make a very big move or volatile move during that trigger time, then you just don't take any position. And during such trigger time, you know that they make the volatile moves. And during this particular volatile move, I already explained, before the data release, they will make a false move. In case if they quickly gain the levels before that particular data, you try to take a sell. And if they drop, you try to take a buy. Yesterday, UK GDP data was released and they dropped the GDP all the way to 64.60. And everybody was telling that the recent low was 64.40. Is it going to breach and things like that? I simply told them that there are only 5 minutes left for the GDP data to be released. They are making a false move. Then afterwards, they straight took it to 65.60, 100 pips in one go. So if you note down the time and okay, whatever the move, keep an open mind. Okay, when they are creating a bullish field, rising beforehand, as if they know the data before, that means they wanted to drop. They do the circular trades and gain the levels and then drop. So when they gain such levels, you just take a sell, but don't take unlimited risk. Keep 30 pip stop or 50 pip stop or whatever it is which is convenient to you. Keep the stop. Once a position makes profit, keep stop at entry. And when they show a quick moves or false move, quickly grab the profit during the third drop. Be happy with that profit. Then again, you just wait for 30 minutes after closing the position. See what is the trend they are setting. And then afterwards, take the positions, referring to the initial lows and the highs and also the net changes. So for that, the trigger times are also important for us. So I call it only as a trigger time. You can just note it down in Forex Factory as well as in FX Street, because sometimes I notice that some of the things are listed here and which are not in FX Street, and sometimes what are listed in FX Street, they are not here. So to be safe, you refer to both the chart, probably both the time even. You will be able to fine tune, okay, today by 16:30 GMT, Fed chairman is going to speak, and probably they could use it. Yesterday also they may yesterday or day before, he made a speech and that was used to make the gains in the market, I think on Friday. And this time around, they will just use it to drop Euro and GBP and make USD gaining more today. So keep the forecast aside as a reference and also focus on that of the 1 minute. I'll go back to that of the PowerPoint presentation. So either you can take the levels from that of the live market code page, or you can use the chart also. I showed it, and I find some advantage with regard to the chart, what I have shown it with the FinViz. Probably if you want, I'll just focus that again. Here, you can just quickly see the chart as well as the level. Okay, when I keep it like this, okay, what is the level they have formed and subsequently how they gained, how much of gain they have done it, about 10-15 pips, okay, fine. In case if you want to go in for a fine tuning of it, you can just click it and you will get the chart. Similarly, you will be able to compare, and also you come across here the rating which has gained more and which is nominally gained, etc. in the rating. You can find that the commodities have not done well and the majors have done well and they are in the green field. So you will be able to understand also comparatively overall trend in the market instead of focusing only on their respective currency. Then you can click the specific currency or the commodity you are interested and you can see the chart by taking the mouse over it and also clicking it and magnifying the chart. So let me go back to that other PowerPoint presentation. So I am taking more time in explaining all the other aspects of it, so I don't know whether I'll be having time to show a trade, but making decisions on trading is more important rather than simply taking a position and showing a profit, because I want you to learn that particular methodology. So make a note of the high and the low and that net change and compare to that of the market from time to time. In case if you are trading from that of the European session, you can take those levels from that of the chart instead of live market code page around 330. What was the approximate high and the low? Have they breached it or not? Then we are not going for any of the statistical analysis there because we do not want to spend more time on that. We wanted to give more importance to that of the time frame. So since in the case of Euro and GBP, they have gone above that of the high, still 30 minutes, they are not come below. So 2 hours, we are not going to take any position. We are expecting them to make little more rise or just a brief upward stop and the last 30 minutes and then stop cutting the high, then start dropping it. If they don't drop it, then they are expected to make an intentional move till the end of the session. Then afterwards, we have to see how they are going to handle the next session. In such a scenario, we will just keep an open mind. We are willing to do a breakout trade above that of the high, and if the high has been breached and they are staying above that of the high for more than 30 minutes, we can do a buy and sell trade also. So we keep a calm mind and depending upon the market move, take the decisions. So identify the currency pair which has made about 40-50 pips, spread between the high and the low. So you come across in the case of yen, the spread is very low. In the case of Euro and GBP also about 50 to 70 pips. And in the case of CHF is there. But in the case of Canadian dollar and Australian dollar, the spread is very, very nominal, especially in the case of Canadian dollar. So such currencies, when the spread is low, you avoid taking positions wherever you come across more spread. And in the case of commodities, in the case of crosses, when the spread is more than 70 pips, then try to take the position. Otherwise, they will be making subdued moves. Then decide upon the entry, whether you are going to take a sell position near that of the high or buy position near that of the low when the low or the high are not breached for more than 30 minutes from the start of the session. But in the case of Euro and GBP, they breached the high, so this condition will not apply. So we have to do a technical buy and sell trade, but the profit booking opportunity might be very, very less when you try to do a buy and sell trade. So instead, we will wait for them to rise because at the highest level, we do not want to take the risk of doing a buy and sell trade. And we will wait for them to rise and take a sell. So we will not jump into the conclusion they have gained so much and this becomes the resistance, so we will sell. No. You know very well they can breach the resistance by no means and nobody can control it. So if there are stops above that of the resistance, they will try to hit the stops. At that time, we will try to take a sell position to book profit during that of the drop. So it is trying to outsmart that of the players, nothing more than that. Then exit, when you are taking a sell position, our first target will be the low set for the day. And when they come closer to that of the low, still we will not take a chance. We will use the trailing stop once the position makes profit of 20-30 pips and trail it down. And once they come closer to the low, we will watch. If they don't breach the low in 30 minutes of our observation, we'll simply book profit. In case if they make a quick drop and just go below that of the low, you can refer to the chart also at that time. And in that case, we will just keep the stop at the low and allow them to go down further and maximize the profit. So you can maximize the profit by taking into consideration the contingency plan so that the minimal profit is being protected, not openly, exposing the position without a stop. Then once you find that the market is moving in your favor, you are able to handle it. In case if that market moves against you, you have to either accept a small loss by keeping a stop, optimal stop of 30 pips, because nowadays that they hit the stops which are about 15 to 25 pips. So we try to use 30 pip stop so that the chances of getting stopped out will be relatively less. And in case if you are stopped out, wait calmly for 30 minutes and try to take a better level sell, nothing more than that. And don't change your mind immediately. Better take a higher level sell and you will keep again a stop and you will be able to see the profit in that. What you have lost and much more than that, you should be able to get it, provided you understand the type moves what they are doing. If they are doing an extended move, then fine. After 2 hours, you can sell again if you are stopped out and then you will be able to see profit. In case if they are doing an intentional move, wait for the end of the day, let them rise about 150 pips net change, then try to take a sell position and you'll be able to see profit the next day. Instead, calmly wait. Next day you take a sell, you'll be able to earn back that money. So in just about 5 minutes, if you're lost, you want to earn back that money, you might end up in losing for the 30 pips. But if you calmly wait and spread out your trade during different sessions of the day, you'll be able to really earn from the market, understand it is a child's play. So avoid impulsive decisions with regard to the buy and the sell. Now in the case the market has breached, so this is what it is. We have to identify whether it is an extended move or an intentional move. And in case if it is an intentional move, then don't try to do a sell and buy trade. You calmly wait, or probably you can do a small technical trade. Just when they are making a small dip, try to 10 pips below that of the market, you keep a buy order and try to take it. And quickly try to keep stop at entry so that when they gain the level, try to book profit using a trailing stop. Don't immediately imagine euro will go to 1.50 and just calmly or say that I am very patient, I will wait for 1.50 to come, they may show 1.44. Then don't get disappointed and don't simply say that I am doing position trade. Holding a loss-making position is not position trade. Try to earn from that of the position a maximum profit of 200 to 300 pips is position trade, not losing it. Okay. So identify the type of moves. I have very clearly mentioned stop and false move, extended move, intentional move, and extended stop. And during this trend reversal time, probably today they are not done it, on Monday, Tuesday, or on Wednesday, Thursday, any day before a prime data release time, they could make an extended stop and next week, because the last week of the month and the first week of the month or the trend reversal time, they will make volatile moves in the market. During such extended stop and upward stop and you try to take a sell position, you'll be able to really make a good fortune out of that. So only thing is you should be able to control your emotions and watch carefully that the high they are not holding it for more than 10 minutes. See, now they are holding high and they are keeping a buy order near that of the high. So at that time, don't sell. In the case of 1.4866, they are simply holding it. 1.4868 is a high. At this time, don't sell. That means they are willing to absorb all the sells here, inducing the short coverers, because the shorts built up in the markets of more it appears, they want them to stop out or do the short covering. Only then they will drop. During that testing time, don't take the position just like that, and the market might consolidate for a prolonged period. Then you will also lose the patience and do this. Cover your short. Later on, the market will start dropping. So understand that session close time they will handle the majors. So around 13 GMT, 12:30 to 13 GMT, we will be able to come across some quick moves. Then you will understand whether they are trapping the short sellers or trapping the long holders. Then you'll be able to understand the next session moves. I explained it in my trading system elaborately, how exactly we can track all those moves. So in case if you want to do a technical trade when they are holding high, the next tip, you can take a buy and keep 30 pips stop. Without a stop, don't try to take a high level buy. It might be a riskier trade in that case. Then accept a small loss if it happens. Then try to keep stop at entry and try to book profit using a trailing stop. Don't simply keep limit and say that, okay, doctor said it can go up to this level, so I just kept a limit, it should go. I'm not got here to say that up to this level they are going to rise. So you have to use the trailing stop and see that you are protecting the profit. In this session, Euro and GBP are expected to make swing and slide moves later on towards the close. So let us take some trade. Now Euro formed the high. Now they are holding it near that of the high, 1.4868. And the bid is 1.4868. And in the case of GBP, 1.6664 is the current level, 1.6689 they formed the high. So they just show a green order, 1.4868, and then just withdrawing it and sell it up to 1.4867. It becomes red. So when they are just holding and consolidating, there is no point in taking a position. So we'll look into that of the crosses here. And GBP also, they breached the high and they are just holding it. And yen, the spread is very minimal. And CHF, they had dropped it and formed 8670. And earlier it was 8677. They breached it again and formed 8668, 8671. So we wait for another 30 minutes for them to complete the extended move, and only then we can take. And in the case of Canadian dollar and Australian dollar, so they are not breached the high or the low, and currently Canadian dollar is closer to the low. So we'll try to take a buy position. So we are taking a buy position. So this is how we have to identify. And you should not simply say that, okay, I'm interested in euro, I'll only focus on euro. You have to identify the currency in which you can really make money. Don't have any sentimental attachment to any currency pair. Find whether the currency wherein you can really enter and exit quickly with 30-40 pips profit as a swing trade. Then buy position, 9507, it has gone up to 97. Okay, anyhow. And with stop of 30. Then Australian dollar, 1.0918, 1.0922 are the current levels, 1.0083 is the low, 1.0940 is the high, 7 pips negative net change is seen. So I'll try to, they are not breached, 1.0918 stop of 30, because they are not breached the high or the low when they are done the upward stop in the case of euro and GBP. Then with regard to the crosses, GBPN, it is near that of the high is 135.99, 135.70 is the current level. And similarly, Euro Yen, 121.05 is the current level, 121.12 is the high, 23 pips positive net change is seen. And in the case of GBPN, 13 pips positive net change is seen. So that means they are making more of a consolidation. The spread between the low and the high, if you see in GBP is hardly about 40 pips. And in the case of Euro Yen, it's again about 30-40 pips. So no good to take position. They are doing consolidation. Euro GBP 0.8919. They are near the high now. Okay. Sell. Okay. 0.8918 with 50 pips stop. So it will be sell position. So here you come across that the European cross is near that of the high. So we are trying to take the sell here because they are just gaining the levels in the case of Euro more and GBP less. Earlier you have seen that GBP more and Euro less. So they are handling Euro GBP, we identified. So when they are near that of the high, we are taking a sell. Probably 89.20 has become the high, but we may not be able to fine tune and take it at the highest point. Closer to high is fine enough, and keep 50 pip stop and accept when the loss comes. Don't move away the stop away from the other market. Then Euro CHF, currently it is near that of the low, 1.2890 is the low, 1.2889, 8891 are the current levels, 1.295 it is the high. So they are handling the European crosses now. We'll take a buy 0.2891 with a stop of 50 pips. Okay, it is mid-session, so we found these opportunities that near the low we are able to buy, near the high we are able to sell, and still we keep stop because our study can go wrong at any given time. So we are not thinking that we know absolutely the market. We relatively know the market, so we try to identify some trades and try to take positions. Ultimately, the currency is not important. It is a question of profit earning is. And similar to that of the players, what the players do, if there are more stops in euro, they try to make an upward stop in euro. If there are more stops in GBP on the downside, they make a downward move against that of the euro rise in the case of GBP. So they don't have any sentiments to that of the currency pairs. So we should also trade accordingly. So many days they have been making a downward stop, and in the case of GBP, to create the bearish feel and buy other currencies. Now they are creating the bullish feel in GBP in order to offload other currencies. So this is how they make the moves in the market. Understand the total picture, then you will be able to trade at ease. So I'll come back again by 14 GMT and explain to you what happened to these positions. I'll track those positions. You can also make a note of these positions and see what happened to that. And you can also interpret here when I come back by 14 GMT. And also I'll give you the calls and explain more with regard to how chart can be effectively used for our understanding. In case you are situated in US and you are not able to make a note of it during your midnight, the initial lows and the highs, how exactly you can use the chart to derive that and also use it to find out what sort of moves they have done earlier and what could be the possible move. The sequence of moves, they do it, they make a false move and an extended move. So once you identified a false move earlier, before a data release, then you come across the rise. So you understand that they are making an extended move. There is no point in selling it within 1 hour during the rise. You calmly wait for 2 hours and sell, you'll be able to see profit. That sort of decisions you'll be able to do it. It is not the levels alone. It is a question of time frame. We make use of it in our trading analysis and trading decisions. So see you again by 14 GMT. There might be some questions. I don't know whether I'll be able to answer. Okay, GB. High low in the chart. Let me focus the camera on the live market page meantime. High low in the chart whether indicates current period. Yeah, we have to use the current chart only. That is very important. And whatever the high low of the current period is related to that of the 330, around 330, not exactly the 330 in the chart. Around 330, what is the high and the low? See, these are all only to identify the type of moves, nothing more than that. No other significance with regard to these numbers. They make a stop and at that time some positions are triggered, that becomes a high, that's all. Okay, in the case of CHF, it's a narrow spread, but still I have taken a buy position because they are doing in the commodity pairs, the USD gaining more, that is why. Okay, what about Euro? I have not taken any position in Euro because I want to wait for the late sessions to come. When they make a small further rise, at that time take a sell, then around gap time I'll be able to see some profit, and also session start time I'll see profit. US session. But I will not be able to show it to you. That is why, no, in your absence I do not want to take any position and say that I have booked profit. During the discussion, whatever the trading opportunity comes, I just want to take it and show you that profit can be booked. You can book, we can take a sell position in Euro or GBP and earn about 20-30 pips. It's not a big deal. We'll be able to see that. Up to that of the initial low, they will definitely dip. Beyond that is the question, whether it is a stop point, because they have just held that more than 30 minutes. Probably you can take a small buy when they come closer to that of the initial low and then book profit on the upside also 20-25 pips. Either way trading opportunity provides. As long as the market is making volatile moves, we'll continue to make trading opportunities. We'll be able to get that opportunities to book profit. Don't try to grab all the profit from that of the market. It is next to impossible. Even the players cannot do it. Along with the players, somebody else will also be making money. But ultimately what they see is predominant of the traders lose. So don't be along with that of the herd of traders in losing the money in the market. Try to outsmart and see what the players are doing it and grab here and there 20-30 pips profit and be happy with that. And in the process of maximizing the profit, when the position is making good profit, some people fail to book it because aiming it will go to 1.50 or GBP to 1.70 and simply sleep over it, and later on it will make a very big loss, and then they contact some analysts and say that at this level I had taken it, market has dropped about 200-300 pips. Then what the analyst can do, they tell me. So it is your negligence. You are not taking enough precautions to protect that, your equity. Yeah, I'll show the time frame, Eric, again by 14 GMT when I come back for this part 2 of tracking the forex market together webinar. What do you expect for the US session? US session, they are expected to make initial drop, and towards close they are expected to make a pullback. When the drop started, a lot of people try to sell as if they are also participating in hammering the market, as if they can hammer the market in a big way. After the drop, they go and sell, get trapped and do the short covering towards close. So US session, initial US session, they are expected to drop the market. Towards close of the European session, a drop is expected and USD gaining move is expected. You find that they are not making big moves and they are only creating the bullish feel and simply holding it, inducing the traders to do short covering and turn long. Emotional traders tend to take such positions. And even 100 times the analysts say that don't try to do impulsive trade. The traders are not in a position to eliminate the impulsive part from that of the mind, and they try to commit mistakes again and again. What do you expect? Okay. High and low shown in the Finviz. Okay, high and low shown in the Finviz, you want to see? 1 minute. You can just make a note of it and you can see it by yourself also. Because I got too many windows opened here. When I open one, the other one gets open. So these are all the high and the low here. You can note down there again the high and low. It gives in a very comprehensive way the levels. And you can just see the chart also by taking the mouse over it. And related to that, commodities and stocks, everything is listed here. It is, I think, one of the city banks. So I'll come back by 14 GMT and explain to you, and no more questions, I suppose. Yeah. So I'll come by 14 GMT and explain to you what has happened in the market and what happened to the positions what I committed, and explain to you more with regard to the chart study because lack of time. So I wanted to give everything in one shot. So in case you have forgotten something, don't mistake. You ask the questions, I am willing to answer to those. And I forgot to show you one important thing, that the blog is now moved to that of forexdirectory.net. Okay. This is a very important thing for those who are following. So forexdirectory.net, I just moved, and FX Street has decided to get rid of the WordPress, and there are some technical issues on that. And so the blogs are all being moved to that of the forexdirectory.net, forexfxstreet.net, and there you can see my blog being posted. You can simply log in and you can sign in and you will be able to go to that, and you can go to that of the blogs page and you see all the blogs here listed, and my blog will also be appearing here. All the blogs will be accumulated and you can just click wherever my blog is there and you will come across the interactions will also be there. So here month and expected move. If you click it, you will be able to see the entire blog content, and you come across, you can just post the questions here at the bottom. Once you log in, you will be able to see this now the column, and you can continue to ask the comments, and I will give the reply also. So that it will be very similar to that of the WordPress what you have been using it. And I saw immediately there was a comment from Jan Poco that it doesn't look nice or something like that. But let me tell you, the life is full of changes. So we have to accept the changes and go according to that. Only then we will be able to show progress. And we will try to make it in an innovative way so that we will exploit totally the advantages given in this. and try to see that we are benefited. Ultimately, that it's a medium of communication. So I am trying to communicate to that of the small traders what could be the expected market moves and also the trading ideas. And wherever it is displayed, if you find it is useful, you can just make use of it and try to ask your questions. I am willing to give the support. Okay. So I take this opportunity. Thank everybody and see you by 14 GMT and take up the